123 companies. You can see the ones I said not to do. A lot of times it's because net worth was negative. Sometimes it's because they just didn't have much data. So Albertsons went private, and then they came out. And kind of nice Albertsons back, because we were running out of companies to compare Kroger's to. It's like every grocery store was going private or going out of business. So it's nice they've come back in. Walmart is really decimating this industry, but you only have 4 or 5 years of data, so it just doesn't work well. So I put them all in there. Some y'all didn't ask for. No one asked for Amazon, but I put Amazon in there anyway. Now, one of y'all tell me the company you're doing, and we'll just look at your company. So, and someone asked about Beyond Meat. You can't do Beyond Meat. There's nothing there. It's just too short. So what company are y'all doing?
AT&T.
All right, so that's an easy one to do up front. All right, so you just click the little triangle there. I don't know if y'all watched my little YouTube video. Now, it's the same YouTube video I'm using for my executive MBA class. So if you thought, well, he's kind of babying us, well, that's okay. So you copy that and you take it over to this Walmart Excel file. We're going to be using this. This is for paper 3. So we'll be using this for paper 3. But you go to the Bloomberg Pace Values, right click. You got your data in there. Go back to the tickers, type AT&T. If it doesn't change AT&T on your graphs, it's because I have one file out there where I forgot. There's a link to all the graphs. It's line 25 on the data part. And there was one of them I actually had typed Walmart in there by accident, but I think I fixed that in what I sent y'all. But if you pull the file from Blackboard, I forgot to fix that one. So you just be careful. You might check that. It's data for graphs B25. Make sure that's referencing back to the tickers and doesn't have Walmart typed into it. But if you've done that, so this gives you all the data. If you just look at this page, I brought in a bunch of data on AT&T, and then I brought in industry data on all of these companies. I only set it up to do 50 companies, but 50 companies is a good comparison. I just want to get a good industry. Some of the industries like semiconductors have a whole lot more than that. And then you go to print page 1, and you've got all of your data. So the kind of things you're looking for, you can see AT&T is obviously going to be really clean. You don't want a lot of not meaningful figures, except for in the turnover section. The turnover section, obviously, all right, somebody's on. I'm going to hit mute anyone's. Where's my mute all? There's got to be a mute all button somewhere. All right, so make sure you're muted. All right, so a few NFFs. It's okay. You don't want them all to be NFFs, but as long as you have a few. So for AT&T, I'm probably going to use revenue per PP&E, maybe revenue per employee. It just depends. And we'll talk when we get to paper 3. A few of you have a huge challenge. A couple of y'all wanted to do Disney. Disney works really well, except for on turnover. Turnover is a major issue for Disney, but we'll talk about that. I don't think anyone in this class is doing airlines for good reasons. It's a tough time to be doing airlines, but airlines have a little bit of trouble with some of these. So if it looks like you've got some pretty decent numbers, like AT&T doesn't have inventory, so that's fine. You don't have to have credit ratings. Not every one of your firms have credit ratings. I'm kind of surprised AT&T's ratings are so low, but you don't have to have credit ratings, but it does help a little bit. So it looks like AT&T works fine. And then you go to the graphs. You don't need to understand the graphs yet, but you want to make sure you don't have a graph. So like I said in a video, if the 90% or the 10% is off the chart, that's fine, because what we're going to probably do, and what we're going to do is you're going to add a page after page 2 and do graphs for AT&T. And so you don't want to edit the graphs on this page. You want to copy them, take them over to this page. That way, if you mess something up, you have the original graph there. All right, does that make sense? And so on AT&T, I'm going to say, okay, you know what? I don't want that 90%. It's really messing up the graph. And so I can really see what's going on here. So times interest earned, I might even take, a lot of times we'll take both the 90th and the 10% out. We just want to see our company versus the median. We can see AT&T is right in line with the industry on times interest earned. Other times we do want the lines. So like on asset turnover, we want the lines, but you can see there's a line that's really messing up. I don't see any major issues for AT&T. Looks like AT&T has some good numbers. They don't have revenue per square foot, but we know that's not the case. I mean, they shouldn't have that. Bounces like this, there's fine. This is acquisitions. Obviously, acquisitions are going to bounce around, but it does tell you if you're doing AT&T, I don't know who said AT&T, but whoever's doing AT&T, they're going to want to know what did AT&T acquire in 2015 and what did they acquire in 2018. I can't remember on AT&T because
It's DirecTV and Warner Brothers.
Yeah, that was the big battle with Trump, right? AT&T and Trump, and so
yeah, and now they're gonna spin it off. So
yeah, that's the typical AT&T thing, right? The whole, you guys are too young to remember that, but the whole breaking up a Bell and then them coming all back together again and then breaking up, it's a bizarre industry. But AT&T, I used to own AT&T stock, and I finally gave up. It was a stock that didn't do anything but go sideways forever and ever. It's like you could guess I wonder what their stock price is now because I haven't looked at it in so long. But it was like the stock price that never.
It's always traded at like $30, but most people use it as like a dividend, cow.
It's $27. Yeah, it's a 7% dividend. So yeah, it's a good dividend stock. But yeah, $30, you can just guess $30 and you're gonna be pretty close to AT&T. And that was the estimate I used 15 years ago when I owned AT&T stock. It just hasn't moved. So so you're gonna have a few bumps. What I'm wanting you on your company, what you're worried about. Let me create something just so you can see it. So if you're AT&T, does this. I don't know why this is chart 6A. It should just say chart 6. But something like that's what you're worried about. Y'all see that chart 6A? Now that doesn't mean you can't do the company, but if you have one chart like that, that's probably okay. If you have 7 or 8 charts like that, that's why, someone wanted to do Tesla. If I did Tesla, almost every one of Tesla's charts would look like this. Tesla had a gross margin. Gross margin should be, 40, 50%, maybe 80%. They had a gross margin of like negative 110,000%. You just can't do charts. I actually typed a T over here. You can't do charts if you got that kind of stuff. So that might be okay, but you just want to talk. Now, if you're worried, that's a problem, then call me when I'm on the bike and tell me which chart's giving you the problem and is that an issue or not. So some of you are going to have that problem, say, with times interest earned. And it might be because your firm at one point just didn't have much debt. And so their interest was like $2,000 and their EBITDA was, $80 million. So their times interest earned can be 80,000, 800,000% or something. It's just not going to fit on the chart. In that case, you just don't show the chart. And we'll talk about that when we get to paper 8. But right now, this is really, really critical because you're about to step into the hardest paper by far, really the hardest two, the first 2 papers. The last thing you want to do is do all this work on paper 1 and 2, and then you get to paper 3 and discover your company doesn't work. All right, so y'all see why this is so critical. So if you're not 100% sure your company's going to work, you look at your charts, you look at your data, call me up. If I can do it over the phone, I'll help you through over the phone. If I can't help you over the phone, then when I get home, I'll bring the data over. You just have to, I can't apologize. I did not check the data for every company. I looked really quickly, but with 123 companies, I was there all day long. I was really tired at the end. So I was looking really quick to make sure. So you might have a company that does not work. There may be something serious. All right. So if you're not sure, give me a call. Do not go past this point without being 100% sure your company is going to work. Okay. You don't want bad data. This will also protect you on paper 7 because paper 7, you're doing things like price to earnings, enterprise value to EBITDA. If you have problems with paper 3, that's going to spill over to paper 7. So this is and also forecasting. So this is like 3 or 4 papers are going to be very dependent that your company works. All right. Anybody have questions on their company based on what you did that you're wanting to bring? So whoever doing AT&T, it should work well, and AT&T is a fairly clean company. Anybody else concerned about your company?
So I emailed you on Sunday my list of 3. So did you like email me which one I should do, or how does...
I'm not going to tell you which to do if you're not sure. Most people, when I ask which to do, if it's in there and doesn't say not recommended, it should work. So it becomes an issue of if you want to ask, some companies are easier than others. So Costco is a lot easier than AT&T, no question. Nike's a lot easier than, you can't do Walmart. That's off the charts. I didn't even put Walmart in there because that's going to be my example. So if you need help with that, you'll have to call and talk to me. What we're trying to do here, or what we're going to do, is go through the process of writing a research report. And we're going to do it over an entire semester, even though normally it would take you about a week to do it. So we're spreading this out. I'm going to give you a lot of ideas on papers 1 and 2, definite things you want to do. But papers 1 and 2 are the ones where you have the most flexibility. And then when we get to the other papers, it's much more straightforward. But always remember this, extremely important. Your goal is a decision on whether this is a buy, a hold, or a sell. And I really recommend you try to get the buy or sell. Try to avoid the hold. So you're trying to make a recommendation. This is more sell side than buy side because you're making a recommendation with the glossy report. So always remember that your goal is not to advocate for this company. So you're not trying to convince someone to buy this company. So a sell recommendation is fine. Now you might have picked a company that you really like, so you're already biased, but what you want to try to do is kill that bias. Go into this not knowing whether you should buy or sell. If you're already decided this is a good company, I'm going to recommend a buy, then you may want to change companies. You don't want that bias going in. Biases are terrible in this type of analysis. All right. You want to avoid manager speak. You can use the annual report. The annual report's a really good source, but you don't want to use something annual report that's not, if it's qualitative, obviously they're going to say they're the best thing in the world. So you want to make sure you can justify what you say from some other side. What I want to do now is walk through the framework for this class. So this was my outline of what the CFA recommended or proposed as a good research report. It is a sell-side report, but a fairly lengthy one. So we're doing kind of a sell-side report, but with everything in it. So it's a little overkill just so you can see everything that's possible. In a typical sell-side report, they won't have all 9 of these papers in them. There may be 1 or 2, like especially paper 8, they may not have it all. Although I have seen some sell-side reports that almost are entirely paper 8, which is the technical analysis. There are some firms that technical analysis is all they do. So, some places are all relative values, some places are all qualitative, some places are all technical, some places are all fundamentals, some have a mix and match of those two. All right, so the first thing you do is review the industry. So what's going on with the industry? What's its trend? So here's where that statistic really, really helps you. Can you find a chart? So a good example, someone was asking about Exxon or Valero. There's a great chart, which is miles driven. How many vehicle miles are people? I think it's vehicle miles driven. How many miles are we driving every year? Guess what was the first year that number declined ever in history?
2020. 2020.
Shocking year, right? The first year in history. Now, I think in the US, the miles driven might have come down a little bit, but China offset that and increased it. Now, when you do vehicle miles driven, are you doing it globally? Are you just doing the US? So that's where Statista can really help. So try the terms vehicle miles driven. So if I were a Valero or an Exxon or a Chevron, that would be really, really interesting to me. If you're doing, I can't think of anyone doing movie theaters. Well, Netflix. If you can find something that shows number of hours online, or TV sales. Now, I don't know how many of y'all, I haven't owned a TV in like 20 years. I don't know how many of y'all there are there any of y'all that don't own TV sets at all? Am I weird? I want to ask how many of y'all have landlines. I bet most of y'all don't have landlines, but are y'all still buying TV sets? Jabari, you have a TV?
I think you're weird.
I got a flat screen, but I don't.
Yeah, do you mean like an actual TV or?
Actual TV, yeah.
I'm pretty sure we all
I
have
have a
TVs, don't we?
TV.
Are you
Yeah.
watching like full TV? Are you hooked up to your computer when you watch your TV?
No.
I watch Netflix.
On your
Or
TV?
Hulu.
How many of y'all
Yeah.
have cable? Is that
Me,
your parents?
I
do.
watched the Food
We have
Network with my
DirecTV.
dad.
I still have cable, sir.
Yeah, I don't, if ESPN goes away or goes online, that's the only reason I would ever buy. Oh, well, the only reason I get cable is so I can watch Law and Order 24 hours a day. But yeah, so I haven't had a TV in 20 years. And it's just online. I'll watch a lot of YouTube and whatever. So, so those are the kind of statistics you're looking for. Try to see cable subscriptions. That might be interesting in Netflix. If you're seeing cable subscriptions come down, or you might have streaming hours, or I don't know what you can find on Statista, but that's what you're looking for here. What's going on with this industry? One thing I heard, none of y'all picked these companies, but I think they're really fascinating, is the Invisalign, the plastic implants instead of the wire braces. I don't know why anybody gets wire braces anymore, because the Invisalign can do like 90% of them now. Boy, the statistics they had on that, on what percentage of wire braces versus what are these plastic things and how that's going up. And the interesting thing was the biggest market for the wire braces for the dentists, these things like 5 times more expensive than the plastic. It's still teenagers. And why are teenagers, you think teenagers, and it's because parents with the removable braces, parents don't think the kids will keep the braces in. So it's interesting, you're looking at these numbers, so you can get those type of numbers. Where's the growth coming from? So some of these, I was getting all of this off of that business breakdown, and they gave some great statistics on those kind of things, which means the statistics exist. They're out there somewhere. And if they exist, Statista probably has them. You're doing FedEx, a great statistic I saw, I haven't been able to find it, but maybe Statista has it, but is cardboard box production. FedEx and UPS, if orders are going up, if firms are believing there's going to be more online orders and home deliveries, you're going to see cardboard boxes going up dramatically. But online orders, what is COVID doing to that? How much, one thing you want to do if you're doing UPS or FedEx, you want to look at those deliveries, and then you want to graph that and show how COVID shot that up. And you want to try to get some sense of, is that coming back down, or was COVID a permanent change of that? So that's the kind of things you're looking at. The threats and opportunities. Remember the threats and opportunities. You can get a lot of those by going to your company, your individual company, and look at that SWOT analysis, because a lot of times the opportunities and threats for your company relate to the industry. What are the major products? What's going on with the major products in your industry? What are the trends? So I was really interested in Apple Watch. I thought it was a waste. I didn't think it would ever work. And then suddenly a fourth of my college students all had Apple Watches all of a sudden. I thought, well, what's going on? Why are they doing that? Google Glasses just never took off, and now Apple's talking about Apple Glasses. Well, how's that going to work? VR, virtual reality, I forget the other one, AR, forget what that is. But what's going on there? Can you measure artificial intelligence and what's happening there? If you're doing semiconductors, you have that, whatever that law is, I've already forgotten the name of that law, but how much you can get onto a wafer, those type of statistics. So you're trying to get a sense of what's going on in this industry. If I were doing semiconductors, I'd be looking at where are the cells? Are they going into desktops? Are they going into laptops? Are they going into cars? Are they going into gaming? Are they going into cryptocurrency? Where are the semiconductors going? We know we got a semiconductor shortage. I was talking to someone, I forget who it was, about semiconductors, and I was telling them, maybe it was Bond. No, it wasn't Bond. It was somebody else in this class. But what happens if China attacks Taiwan, where so much of the semiconductor industry goes through Taiwan? What is that going to mean for the industry? So those are the kind of things you're looking for: threats, trends, major opportunities. And then the product life cycle. If you got a product that's mainly sold to senior citizens, boy, that's one of the easiest statistics there is. Demographics. One of our best, it's hard to forecast, but we've got a pretty good idea how many 65-year-old Americans there's going to be in 20 years. That's one of the easiest things to forecast. Even with COVID and opioids and everything else that's going on, that has a little bit of an impact on mortality, but it's not that major. So you can definitely see, if you're selling, Johnson & Johnson, and you're selling baby diapers or whatever, I don't know, or not Johnson & Johnson, but Procter & Gamble, then yeah, how many babies are people having? What is the birth rate? What products are people buying? If you're doing sodas, I don't think any of y'all are doing Coke or Pepsi, and I didn't put Coke or Pepsi in here. That's kind of strange. I probably should have pulled one of those companies. But sodas, are people drinking sodas? What about alcohol consumption? Your generation's not drinking beer as much as your parents did. So those kind of things. So there's a lot that you can do there. Statista are just a good old Google search, or this is when you go to your company's annual report and you look for charts there that give you some information. Go to your website, look for investor presentations. If you're doing Exxon, definitely you're going to find some things on Exxon's site that's going to be from really good statistics. And you can, even if it's from Exxon's site, if you see a really great chart, I'll let you trust them that they show a chart and they say these are the numbers. They're probably not lying. It may have a bias to it, but the data is probably accurate because they have some SEC requirements not to lie. So those kind of things, all right? So you've got a lot of stuff. Now, some of you are probably freaking out right now and are thinking, I can't do all of that. Well, you don't need to do all of that. You might do some of that. It depends on your company. So pick the things that are most critical to your company and really talk about those, all right? If any of y'all want to throw out a company name and get some ideas on what I think you should do, this is where I really recommend you call me. And it's not because I didn't do all these industry. My industry is financials. So most of your companies, none of your companies are in my industry. I know insurance and banking and a little bit of real estate. And even real estate, I've lost that. So, but just from doing this class for the last 20 years and reading papers, and I've got a lot of ideas of the kind of things you can cover, all right? So this is when I really encourage you, call me. Yeah, I'm too talkative. I'm going to overstay your welcome. So you want to talk for 20 minutes, I'm going to keep you on the phone for 40. But, just get it up and go for it. I will give you some ideas from what I've seen in previous papers of things you can do, all right? Anyone have a question now? And you're like, man, what would I do with American Eagle, or any questions now?
Yeah, I do actually. I was thinking NVIDIA, the graphics card company.
Yeah, I was talking to someone about NVIDIA. And so there's a lot of AI there. There's a lot of gaming, I think, there. So on a company like NVIDIA, what you want to do is figure out what their product is going into and then try to do a chart of that. So if NVIDIA is mainly AI and gaming, I don't know what else they're doing, but mainly AI and gaming, maybe there's some autonomous vehicles. Are they into that? Given the AI of autonomous vehicles, try to figure out what is the main use of their product and try to do a graph of that. So a good chance, Intel is big in desktops. You can do a chart and show how the sale of desktops has been coming down. That would work fine. All right, does that work? So you don't have to do your company's product necessarily. You can do the products that your company sells to, and that can give you some really good charts.
Okay, sounds good.
So quick question. So for like little different like metrics. So like let's talk about UPS, for example, when they decided to come out with the no left turn, I think it was UPS, where they decided to come out with the no left turn because it would apparently choosing a better route with less left turns meant faster deliveries, less time on the road, and overall, it seemed like a very minuscule number, but when they added up the hours and the maintenance and all that stuff that actually went into it, it actually saved the company or the corporation a ton of money. How would you put something like that in?
Make sure it's material, something like that. If you want to emphasize that management is very diligent on cost savings, and that's an example, you can certainly do that. I wouldn't spend too much time onto it unless it's material. I heard a podcast where they said, I can't remember what airline it was, might have been United, but on their meals, they discovered that they didn't put olives on the salad. It saved them like a few $1,000s in gas and jet fuel a year. I mean, that's funny and entertaining, but it's probably not that material. And I hear something like that, I think, the money they're saving on the jet fuel for olives, they probably wasted it with the CEO's time of reviewing that. So, so make sure it's part of, the, material to the company, unless you're just trying to make a point. So if you're trying to prove that Costco is really, really strict on costs, so strict, here's a real extreme example. I would just limit yourself to one of those. All right. So make sure it's material. Now, someone asking about groups. So groups are great. You can't, if you're doing the same company as someone else, that's fine. Just make sure it's all independent work, all the work you do. You can share articles. You can share resources like online charts that you found. Just make sure you don't share your actual Word document and Excel documents. All right. Everybody understand that? All right. Any other questions here? This is when this is really the critical thinking part of this class, because there are a million things you can do, but you can't do a million things. So you've got to stop and think. What can I do? So what is material? So you got to take a million things. You got to get it down to 4 or 5. All right. Someone was asking about Costco. Costco's retail. I think with the Costco, listening to that business breakdown, like I was talking a couple classes ago, one thing I thought was really strange there is they didn't mention anything about online sales. So what's Costco doing online? What is Costco doing with curbside delivery? Those kind of things, self-checkout. What I think is real exciting to me about Costco, so Costco has a box. They have a store. Amazon, man, it's amazing the disaster Amazon's had with Whole Foods. They just, most grocery stores I've seen shooting up in revenues because of COVID-19, except for Whole Foods. So Amazon doesn't have the box. Costco does have the store. It does have the box. Well, Costco is figured out if they stick stuff like dental offices and banks into their foyer, it picks up a lot more traffic. Well, that gives them a big advantage. So, so talking about things like what advantage does Costco have because they have a physical presence that other stores don't have? So those are the kind of things you're looking at. Online sales versus people going to stores, curbside pickup. There was one article I read that I thought it's actually in that business breakdown on Visa. Your parents might remember this. They may be too young to remember this, but your grandparents will remember this. Back in the 60s and 70s, everybody had gasoline cards. So you had your Chevron card, you had your Exxon card, or mobile card. And then Visa and MasterCard came along, and those all disappeared. And Visa and MasterCard essentially became an oligopoly. Well, Business Breakdown said Walmart is sick and tired of paying those exchange fees. And so what if Walmart offers what if they start their own bank and offer their own credit card? And if you use Walmart's credit card, they give you a 4% discount. If you use Visa, you don't get this discount. Now, in the past, people said, well, I don't have to carry around a Walmart credit card. But with your Apple Wallet, having a Walmart credit card, you might have it set up electronically. So every time you walk into a Walmart, it just automatically uses your Walmart credit card. And you don't have to do anything. You don't have to carry a card with you. It's all set up in your Apple Wallet. Would you do that? Would you stop using Visa every time you go to Walmart if you're going to get a 4% discount, or every time you buy Walmart online? What if Amazon starts a bank and starts their own credit card? Would you use Amazon's card, get a 4% discount? It's all set up online. So those are the kind of big issues. If I were a Visa, I'd be shaking my boots on something like that. Mainly given how concentrated retail is, Home Depot, Walmart, Amazon, and that's more of an issue for the banks as well as Visa. But all right, CBRE, real estate, I mean, it all comes down to Jabari. That is real estate, right, Jabari?
Yes, sir. It is.
Real estate's a little challenging. You'll have a few problems that you on paper 3 we'll have to talk about. But I'm hoping to have Raul, one of our former students, he's doing real estate in New York. I want him to talk to the Investment Society about what COVID and work from home has done to commercial real estate. And I think you might focus on that. You could probably look up, what's the name of that firm? Oh, I can't remember. Work from WeWork, is that it? You could probably do some analysis of WeWork and why they've struggled so much. So there's a lot you can do just on the changing nature of work. I don't know if CBRE is office or if it's warehouse. Warehouse is probably doing really well right now, right? The build-to-suit warehouses. So you might look at property group types and those kind of things. But yeah, if you're not sure, call me. I mean, you can tell that I don't know what I'm talking about, but I talk a lot. So I'll have a lot of ideas just based on prior papers that I've seen. So I'll give you some ideas, even though these aren't my industries. All right, marketing. If you're doing Nike, Bloomberg, for some reason, does not have the marketing spend for Nike and Adidas, but Capital IQ does. And I would definitely bring in the marketing expenditures for Nike and Adidas and compare them. I actually like to do a revenue per marketing spend on those two companies and just compare them for paper 3. I think that's really good. Pricing issues, I think, are interesting. If you're doing a Chipotle or you're doing any restaurant that's doing Grubhub, how are they handling this additional charge that Grubhub is costing them? And it's not immaterial, right? I've never used Grubhub. Have y'all used DoorDash or Grubhub?
Yes, sir. And Uber Eats.
So Henry, you've done DoorDash?
Yes, sir.
All right. So when they show up, do you have to pay them a tip, or is that part of?
If you want, I always tip, but you pay beforehand. Like you order, and then your credit card is in there, and you pay beforehand, even the tip.
It's going to cost you a little bit more, so the extra $2 or $3, right? Because you're tipping.
Yes, about 3 or 4. Yeah.
And so, what is that going to do to Chipotle? So Chipotle has to pay something in Grubhub, but Chipotle's not charging you for Grubhub, right? So that's all coming out of Chipotle's margins. But Chipotle's getting more sales because they're getting this. So you need to do that math. I think that's really material. Chipotle's also doing these master kitchens, which I think is really interesting. That was in that business breakdown. Chipotle used to cook everything in the store, and now they have this one centralized store that's doing that and delivering it. That's a huge change to their operations. I would put that in paper 1. Now, remember, paper 1, you're not talking about your company. So you don't want to talk about Chipotle and Grubhub. You want to talk about the impact of DoorDash and Grubhub on the entire industry. All right. So be real careful. I've had some students write a company paper for paper 1. They had to redo the entire thing because it just wasn't the right paper. If you want to talk about elasticity, pricing cycles, elasticity is not something you can actually calculate. You have to have a PhD in math and have inside information to be able to do that. But if you're talking about tobacco, if you do Philip Morris, Philip Morris is going away in the United States. Fewer and fewer people are smoking, but they're doing great in Russia and China and other countries. The U.S. is great at exporting the things that kill people, like fast food and cigarettes. So you look at that. That's an industry that has very low elasticity of demand. So think through that. But do think on your company, on your companies, What are their marketing strategies? Now, when we get into porters, that's where you want to bring the marketing in. Remember, in porters, we're going to talk about porters a lot on Thursday night. On porters, there are cost leaders and there are differentiators. For differentiators, that's where the marketing strategy is so important. How does this firm present itself to the public? So you want to look at the key competitor. Again, don't focus on your firm, but key firms in your industry, the biggest competitors, how do their commercials differ between each other? What does a Costco commercial look like versus a Walmart commercial look like versus the Target commercial? Just look at the people, right? You know, what is the problem Walmart have? Have y'all seen these Facebook posts of videos of people at Walmart? I've never seen, you know, these people, what they go in the wildest dress clothes. I can think of some of these, you know, some of them pretty disgusting. I've never seen people like that in Walmart. I don't know where they're finding these videos. I've never seen a video like this of look at the people we saw in Target. I've never seen videos like that of look at the people we saw in Costco. I only see it in Walmart. Why is that? Why do they have that reputation? And does Walmart even mind that? They want to be the cheap cost leader. And so look at the commercials. Look at their websites. Walmart is starting to do really, really well on online sales. Why is that? Is that because they bought jet.com? So obviously with anything retail, you're going to have to do online sales. But the same thing on the business to business. If you have business to business, how do they present themselves? How do they differentiate themselves? So on paper one, your goal is to figure out how the different players in the industry differentiate themselves. And in paper two, you're going to focus on how your company differentiates itself. Okay, y'all see how that works. All right. So paper one, you might talk about how does Puma versus Adidas versus Nike, how do they differentiate themselves? And you get the paper two, it's specifically what does Nike do to separate themselves from the others. All right. Special accounting issues for your industry. Again, these are industry issues. Inventory issues. Fair value accounting doesn't really affect most of that's more of a financial services. If you're doing energy, master limited partnerships, if there's a lot of international sales and if there's any currency issues, it is possible you won't do anything on accounting in paper one because it's just not a big issue for you. If you're doing pharmacies or energy, research and development is usually a big issue. Acquisitions and mergers, acquisitions, if your industry is going through a lot of that, you might talk to them about that. Regulations and legislative issues are really important for paper one. You know, if I'm doing Amazon or I'm doing a Facebook, I'm definitely going to be talking about what's going on in Congress with this industry, what's going on in China, what's going on in Europe. I would definitely hit those. If I'm doing General Dynamics or Boeing, I'm going to talk about the budgetary process in the United States and in China and Saudi Arabia, those countries that do a lot of military spend. Any public relation issues, like with airlines or pharmaceuticals, like COVID was like good news for pharmaceuticals. Pharmaceuticals was one of the most hated industries in the world. And then suddenly they were loved by 50% of the United States and hated by now it's all political. But you know, what's going on public relations side with these industries. And then the porter. So we're getting a porter really heavy on Thursday. All right. So hopefully you're getting some ideas. Now, this is the key. Make sure you have this in your notes. We're going to talk a lot about this on Thursday. What I want you to do with this part of the paper is when the opportunity arises to take something in this part of the paper and put it in the Porter framework, I want you to put it in the Porter framework. All right. So if you're talking about marketing and differentiation, put that under the Porter framework under a competitive rivalry or under competitive rivalry. How does this industry, what's the competitive rivalry within this industry? Put it under Porter. If you're doing a graph on vehicular miles driven, so you're doing gasoline and you're looking at how many miles are Americans driving, put that under buyer power in Porter. Okay. If you're doing auto manufacturing and you're worried about steel prices, and you're going to do a chart on steel prices, put that under supplier power. All All right, everybody see how that works? That makes sense. I will count off if you have something that fits really well on a Porter's factors and you don't put it there, because then it becomes somewhat redundant, like you're jumping back and forth. So if it belongs on the Porters, put it on the Porters. That doesn't mean everything goes on the Porters, but I do want 80% plus of your paper one to be a Porter under a Porter framework. All right, that's very, very important. And then the macro analysis. Now I'm real strict on this. You've got to find some macro factors that you put into your paper one. Now macro can be, well, I don't like things like GDP, interest rates, commodity prices. Well, commodity prices can work if that's really central to your process. Try to find things that are as industry specific as you possibly can. Now it can include things like, well, if you're doing Netflix, anything on streaming, how much streaming is going on? You know, bandwidth, I don't know what you can measure with that. You know, how much download, I don't know if there's a measurement of how much download is going on, those kind of things. You could put average streaming speeds, you know, with 4G and 3G and whatever we have. You know, how many computers in the United States have high-speed internet over time? That's obviously a big issue for Netflix. That would be considered a macro factor. So something that's a kind of a major issue. It doesn't have to be just economics. Percentage internet sales, that can be a macro factor. Anything doing with demographics can be a macro factor, okay? But you need something in there. If your firm has a major raw material that's like steel or coal or, boy, I don't know, then put that in there. If your industry is really sensitive, like Valero, you got oil prices. That's one of their inputs. Then you could do a graph on oil prices and put that under Porter supplier power. If you're doing Facebook, you could do a graph on advertising spend, TV, newspaper, Google, Facebook or social media, TV versus computer versus internet versus mobile app. That would be a macro factor. All right, there's a lot of things to do. Jabari, if you're doing real estate, boy, it just seems like anything you can find on a statistic on a percentage of people working from home. I know there's data out there and there's got to be places that define it. You can just Google these. TISA might not have it. I've seen charts that show that. Jabari, I thought this might fit in your paper. I thought it was really interesting. The Economist has talked about this, but the impact of productivity on productivity of people working from home. And there's been a lot of debate about that. The initial numbers, initially people thought people working from home, they're going to be less productive because they're going to be checking Facebook every 3 minutes instead of every 4 minutes. But now what they found is productivity numbers went up. But then I read another article from Economist that said productivity went up, but that's because employees are working for free. All that time they spent commuting down there, they're now giving that time to their employee for free. So it's not that they're more productive, it's they're working longer hours without pay. Was that more productive or not? So those kind of things, Jabari, would work great in your paper.
Where you said you found that you got those articles from The Economist?
Yeah, so if you're interested in that, you don't have The Economist, email me and I'll do a search and see if I can find them and I'll send the articles over to you. I did, if anyone's doing Apple or I forget Amazon, Apple, there were 2 great articles on Apple on Tom Cook here just recently. I put those out on Blackboard. So if you'll see them out on Blackboard under miscellaneous materials. Economist articles are great because they bring up those type of issues. They didn't mention your company, Jabari, but they were talking about so obviously employers that are going to hire a real estate firm, they're looking at those productivity numbers. Can we really let our employees work from home? Or is it going to kill our productivity? What does it do with, thinking outside the box kind of stuff? If we don't have our employees talking to each other live, are they becoming less innovative? Those are the kind of things people are asking. And so there's plenty of people writing articles about that. And so that's another thing on the macro. I like you to have charts, but it doesn't have to be a chart. So Jabari, if you found a really great quote from like an employment service firm, talking about the impact on real estate and on employers, you could just quote them, and that would be somewhat of a macro factor. People talking about the impact this is having. Studies. There's obviously a lot of PhD students that are out there doing their PhD study on these type of things, and they're out there. All right. A lot of cool stuff you can do. So be innovative and creative. What you're trying to do, you want at least one macro factor where it is statistics, it is a graph, and what you want to talk about is what's the history of this macro factor. So let's say you're doing oil prices. So what's the history of oil prices? Where are they today? And what are people saying about the future? All right. So at some point in the paper, when it comes to the macro factors, those three things, the history, today, and what people think going forward is. All right. So you show the history of oil prices, show where oil prices are today, and some people's projection of where oil prices are going. You know, it's so funny on oil. When I started my career, people were talking about peak oil. Y'all probably have heard that. But when I started my career, it was peak oil that we're running out of oil. Now they use the term peak oil, which is we stop using oil. So peak oil used to be on the supply side. Now peak oil is on the demand side. And that all happened in about a 25-year period where we flipped from we're going to run out of oil to we're not going to use oil anymore because no one needs it. So, you know, those type of discussions. Are y'all getting some ideas? Hopefully, I mean, there's just millions of things you can do. It's just, so that's what I'm grading on here is that you're coming up with some good ideas. So call me and I'm sure I'll think of something. Boy, I can always make up stuff. So make sure you can link that factor to your industry. So some students say, I'm going to do currencies. Look how weak the dollar is. Well, if only 5% of their sales are overseas, that's just not that material. So make sure they have a substantial amount of business overseas. Most of your firms are going to talk about currency risk somewhere in their annual report, but that doesn't mean it's material. All right. Find something that's truly material to their business. All right. Now, if you do NVIDIA, one thing you can definitely do on NVIDIA that I find real, and I know you can find charts, and this could be your main focus on NVIDIA on the macro, is skilled labor. Skilled labor is huge. It's a major issue. And you could tie to that immigration, US immigration rules. Obviously, the big tech companies want just open borders. We want skilled labor. Give us all these people from China and India and Russia. We want these workers. And obviously, there's a big political issue with that. Why don't you hire Americans? And they're saying there's not enough Americans to hire. I don't know if y'all remember USAA got in a lot of trouble several years ago. They were hiring all these IT people from India, and the local news was showing all these people walking to USAA, and the big thing was, why aren't you hiring people from, you know, the local universities? So it's a very touchy political issue, but obviously NVIDIA needs engineers. They need computer people. And if they can't find these people, that's huge to their business. So skilled labor, and you can just go on the Statista and just type skilled labor. I don't know what will come up, but there's a lot of graphics and charts that will show you that. So there's a lot of things you can do for all of your companies. They may want to throw out their company to see if I can make something up off the top of my head.
FedEx.
Well, FedEx, you know, the online shopping definitely makes sense. More online shopping is great for them, no question. I think you know, you could, gasoline prices could certainly be there. I think one of the issues FedEx and UPS might be having, this may be more of an issue with trucking, but the availability of drivers, it seems like this, I don't know if you've seen that. I don't know whoever's doing FedEx or UPS. I don't know if you've seen that, but it seems like they're having a trouble finding workers to drive. And that's why there's going more and more to the gig economy. So you might have a labor, many of y'all, labor is going to be a big issue. I think UPS, it's a unionized, FedEx, unionized labor force. Anytime you have a heavy unionized labor force, that gives you a lot of stuff to talk about. What are the union issues? What are they debating? When do the union contracts come up? Those are always good, even though that's more paper 2. You can talk about it more generically in paper 1. Anybody else?
Chipotle.
Well, Chipotle, that whole thing of home delivery, I think would be pretty critical. Food prices, you might look at Chipotle and see how much the food part, or any fast food, how much the food is part of their cost of goods sold. See if you can find that, and then look at food prices, what's going on there. One thing on Chipotle and others is you can certainly find, this could be a macro issue, but is this whole health trend, obesity in America, all that kind of thing, that would fit well as a macro factor in paper 1. People is this whole move to healthiness really hurting McDonald's and Chipotle? Boy, y'all can see I can make up stuff anywhere. So yeah, that's why I asked you to read the business section of the firm, because they'll bring up a lot of these issues. What are they worried about? Those are the kind of things you want to bring into your paper. And then the last thing, and this is so critical for paper 1, and some students get 0 on this, and it's like 20% of the paper. You can resubmit, but you need a summary, and your summary needs to say, how does this tie back to industry growth? Not to your company growth, but industry growth. Now, I'm going to show you, this is something I really want you to do. This is one thing I count off a lot of points on paper 1. You just did this massive Porter analysis. And one thing I've seen in a lot of papers, if they do this massive Porter analysis, and then they come to their conclusion and they ignore all of that in their conclusion. Say 80% of your paper was Porters, and then you get your conclusion and you don't need any of that Porters. So what I really like to see, and a lot of students have done this. Now, one other thing, remember, one of your resources is prior papers from prior students in prior classes. So find a company that's similar to yours and see what they did. But some of the more recent papers, I've gotten them to do a Porter summary chart. So put all the Porter's factors with a summary, and I'll show you one. I'll give you an example of it. I like to say, you know, each Porter factor is a buyer power. Is it favorable for the industry or negative for the industry? And then a comment that says why. A quick summary, like a 1-sentence summary, just in the table. And then make that part of your conclusion, so that all that stuff you did on Porters will work into the conclusion. So even your macro factors should be part of your Porters. So you really want Porters to drive to that. So I'll count off a lot of points. If you don't have a good conclusion, if your conclusion is not focused on industry growth, and if you don't have your Porters coming into the end. And really what you want to do is, if buyer power was the most important thing in your Porter's analysis, you want to bring that in and say, what does that mean for your industry growth? All right. So that's real critical here. And not just because of my grading, but it gives you a stronger paper. So that just tells you that's the #1 weakness of student papers, is they do all this work and then they don't do anything with it. So they're just going through the motions. Oh, I got to do Porters. So here's my Porters. Oh, you want a conclusion? Well, here's my conclusion. And no, you're doing the Porters so you can create your conclusion. That's the purpose of it. All right. So bring it all together. You never do anything just to go through the motions as an analyst. All right. What I'll do on Thursday is I'm going to walk through real quickly the rest of this, because I really want to focus on the industry, because that's what you're working on now. I want to make sure, especially this weekend, you can do that. I'll finish up this template real quickly. So probably in the first 15 minutes or so. And then we're going to go real quickly into Porters. We're going to be spending quite a bit of time on Porters. And Porters is more than just Porters. So remember, it's Porters, it's value chain management. I don't know if any of y'all done a value chain management on your firm. It's supply chain management, and it's economic moats. It's all 4 of those things. They're very closely related. All of them are very closely related, but very powerful for this paper 1.